It's great to have your company this Friday, the 19th of March. I'm Jessica Ramir, market analyst with Bell Direct. You're tuned in to the weekly. Well, this week we learnt Australia's economic rainbow recovery just got brighter. Employment is back at pre-COVID-19 levels. Australia's unemployment rate fell from 6.4 to 5.8% in February as 90,000 people gained jobs. That was far more than the 30,000 expected. And interest rates were pledged to be kept at a record low until wages pick up in 2024. And economists upgraded economic growth, predicting 4.1% this year. Now, this supports earnings and share price growth in financial companies, consumer spending, travel, tourism, and real estate stocks. And also explains why this week we saw shares in Harvey Norman HVN rise to a 14-year high. Betting company Tabcorp TAH hit a 1.5-year high, and investment funds management business Platinum PTM hit a 2-year peak. But the broad Aussie market fell slightly this week, falling for the first time in 3 weeks. So why the slight pullback? Well, 20% of Australia's share market is made up of mining companies, and Australia's biggest mining companies fell from Monday to Thursday. BHP in particular, their shares fell about 5%. That's their biggest weekly pullback in 7 weeks. Rio Tinto, Fortescue Metals also fell by a similar amount, all falling into technical downtrends, suggesting their shares could fall further. Now, the reason? Well, China's going green, limiting steel production to curb pollution. So we'll need to buy less Aussie iron ore, hurting future earnings in FMG, BHP, Rio Tinto and Mineral Resources, MIN, and also likely will dent their future profits. But you'd think Aussie iron ore companies will adapt and divert some of their excess capacity to Europe and the US, right? Well, Morgan Stanley has modelled the different scenarios and now thinks that lower grade iron ore producers could suffer the most. So it downgraded FMG to a sell, expecting its earnings to fall and FMG's dividend to drop. Now, Morgan Stanley also downgraded Mineral Resources MIN to a sell as well, also tipping that its dividend will fall. But what stocks shone the brightest in the ASX 200 this week? Well, KFC and Taco Bell franchisee Collins Foods, CKF, they rose 18% after a fund manager bought a major stake in CKF. Now, that caused their shares to rally and break out, and CKF shares are now likely to see further share price growth. Financial registry company Link Administration, LNK, also did well, up 9%. Why? Well, its biggest growth market, the UK, now has about 50% of the population being vaccinated. So LNK shares are looking up. Citi also came out upgrading LNK to a buy, $5.70 target. On the back of its property business, LNK's property business reporting a 90% jump in earnings in the half year. Now, LNK shares are also in a breakout, so keep an eye for potential share price growth. As for standout stocks in the top 500 or the All Ords, Gold Explorer, De Grey Mining, DEJ, up 27%. Infant Vitamin Company, Clover Corp, CLV, rose 23%. Patient monitoring business Alcidion, ALC, followed. And a lithium company called AVZ Minerals, AVZ, they rose 22% after bagging another sales offtake agreement with a Chinese lithium company. Now let's move to next week. I think there's 2 key focus areas. The first one, I'd say look at those most traded stocks across Bell Direct this week and maybe do your due diligence to see what future value they can provide. Now, some of those most traded stocks across Bell Direct this week included patient software company OneView Healthcare, ONE, wine logistics business Digital Wine Ventures, DWH, and IOU, ticker code IOU. Now, all companies are in share price breakouts, backed by good news announcements. IOU is a new BNPL provider in Asia. Now, unlike APT, Zip and SZL, all in technical downtrends, IOU's share price looks pretty positive. Now, IOU, for those that don't know, is in a niche market. It services already 20 of Malaysia's biggest companies, including Citigroup, and processes 20 million transactions a month through its technology. And now IOU is just entering the buy now, pay later space after it jagged a deal with iPay88, processing 50% of Malaysia's online payments. So IOU will be added to the Australian Tech Index on Monday, and that means that its shares will then compulsorily be purchased by ETF providers who track the Aussie Tech Index. So IOU could indeed be worth a look, or the tech ETF itself, a tech. Now, secondly, it's worth taking note of other companies that have grown in market size and will be added to the ASX 200, the ASX 300 and the All Ords or the Tech Index on Monday the 22nd of March. It's a great opportunity to really look at stocks with potential that are growing their business footprint and or earnings and are just about to be compulsory acquired by ETF providers. Now, just calling out some of the ASX 200 companies to be added, they included CDA, CIA, HUB, NIC, NXL and PLS. Now, moving to companies that will be added to the ASX 300, they include Life360, Adairs, BrainChip, Chalice Mining, Coronado Global, Dalrymple Bay Infrastructure, FCL, Home Consortium, Marley Spoon and Piedmont Lithium, as well as Redbubble. Now, moving to what you can see on the side, the companies added to the All Ords. I'll just call out 3, but there's plenty more. Alpha HPA, Adore Beauty and Cyclopharm. So consider looking at the full list of stocks to be added to the indices. We'll link that in the description below, and don't forget to potentially consider reducing your exposure to iron ore stocks. From all of us here at Bell Direct, have a happy and safe weekend. I'm Jessica Amir. Bye for now.